We are featuring the big bellwether Google. And what happened yesterday during the middle of the day is one thing. Google gave it a chance to get out. It has a $34.70 range. It came off of 672 right to the lows and popped like it should. It popped. People were buying the dip and whatnot. We don't see where this name is viable and where institutions come on board is going to be down here at this trend line right around 650. What it was this was the bottom base of this diagonal line that went up to the higher reversal where it was extremely overbought, and it's corrected over $100 off of that high, 675, as we had told everyone. And that, yes, stocks get overbought. They release some report. The earnings aren't that great, but institutional money will probably come back in the name down around the 650 area. Just remember that the bottom of the base here, that this particular other trend line is where this horizontal line right here. The 20-week moving average is down here. That's going to be the support. It's below the 10-week moving average. It has not been below the 10-week moving average since it started its weekly bull run. Dips will be viable, but they'll be viable. They'll be in a very defined lower support level and new resistance levels, and that the weekly distribution level from that extreme overbought top over here is not nearly as overbought. And at some point, when we get down to levels of testing the 20-week, we are below the 10-week simple moving average, folks. That means that the stock market orders have been taken all the way down, and this is where this bull trend started back in the summer from that base. This is where the breakout is. Once it got above these two resistance levels, this was right here a key factor. And I'll put my trend tool here for you. Is that this breakout is where it really started. That's the second part of the breakout. The first part of the breakout was right over here in this half weekly bar, right there at 618. And support will be defined at the 20-week. Support in the near term for tradable ranges will be exactly where this half bar is for support. But this is where the second part, when I got above my resistance levels here, this weekly one, it's this weekly bar that topped that high right here and gapped up. It's going to be, we're sitting on that support level right here. Okay. And the name sold down to 672. And a $6 bounce within the price volatility of $34.70. So if you shorted up here, you made a lot of money. And if you're getting out down at the bottom, you're keeping all your profits from the intraday short. There will be ranges. The 680 put that closed at $2.35, when they ran that up to 706, they brought these to 1 nickel. From a nickel, if you bought 100 contracts for $500 and you sold them up here even at $7, you made 70 grand. Do those kind of things hardly ever happen? Very seldom, very seldom. But you know what? That was the 680 put that expires today. But for a nickel, you don't have anything to lose but a nickel. And the support level, yesterday's lows, when I showed on the live video during live market hours when they released those earnings during the day, you got down to that 675 area, and he undercut it by $3 from yesterday's sell-off. Then they bounced it and they got it up to 706 to unload it, and that's where the $34.70 range came from. As far as, well, you take a look at the highs and you take a look at the lows, you take a look at the close. So yesterday they ran at $20 off the bottom. Then they closed it there, $20 off the bottom intraday when that announcement came out. Then this morning they ran it up to unload it like they should at resistance. And in pre-market we talked about how it would have to go all the way down. It still has to get down another $12 to reach the support level of 650 right here. And at that point in time, that's where institutional money would look to make engagements. Because the bulls that sat on the sideline and missed this whole rally right here, they've got a chance to buy these lower dips. They do. And I already covered Chipotle Mexican Grill. And stocks have been getting hammered. Look at Priceline. I'll be doing it next. I told people to let me know when Priceline got to $520 because it was a great short up there in the last volatility at 650. It's down another $100 over the last 10 trading days. Yeah, it is. Wouldn't you like to make that kind of money? Come get on board. This will be the support levels, MMTs. That's a breakout level. This is the level where we would look at getting a lot of great call transactions, but we're going to be range bound from this original low now. You'll have a $6 hook from the bottom to the top of the range, and I'll be happy to show you that on our 3-minute chart over here, intraday wise, you can see here that each one of these lines are called a teeny line, and they're $5.21 per line. And even with our newest MMTs this morning and some of our free 5-day trial, it was about how to short that up there at 706, 705.75, and went slightly above it. But you can see how it came down, and each one of these lines are $5.21, and it's a teeny line. He went down 1 teeny, 2 teeny, 3 teeny, 4 teeny, 5 of those teenies, plus he undercut it to the 6th one, and that's $5.21. That means that this name went down 0.28 minus 4.41 teenies at $5.21. That was minus $23 to that level there. And this is all mathematically coded. It doesn't lie. These ratios, it's a high frequency computing model system that busts all of the robots that are used in the exchange system today in high frequency that people do not know about. Directional price movement is you are coming up 1 teeny. That's $5.21 each line, just like I showed you. And that when you do come up, you're going to have ranges in these prices, and they're going to be tradable intraday. And it's that simple, and it's that accurate. That's the daily movement in the MMT platform. Back to the weekly. Like I said, we break this support level next week. This is where the major part of that breakout, this will be called, this is breakout number 2 right here. Breakout number 1 happened off of the base to here. So let's establish what the breakout points were, MMTs. As you know, for my new MMTs, you were here to here. That was your resistance level. And this were your breakout levels and your weekly consolidation levels into the resistance level. This is where the second breakout of the original bull breakout happened, breakout number 2, to the reversal. And it took an earnings announcement and a lot of manipulation, and you can watch the other videos about it, learn more about it. The thing that you need to know is how to trade Google and why you need to be here to learn what these big ranges are. Big moves down today, nice short. Everything that I showed on the 60-minute chart in pre-market was to go straight down. And it did. That's the first bottom of the actual earnings move to 672 support level right here, where that weekly breakout, and I'll conclude that MMT. The upper end of the range is going to remain at this weekly level right here. It's going to be the weekly bar. I'll draw you a trend line so that you will have it MMT right there. This line right here, I just want people to know that's the bottom of that candle, but when I get right up here, this is 685. That's the bottom up to resistance levels where you would roll back over within the broader $34.70 range. So you've got right now a total of 650 pennies off of that low. There is another area of resistance that you would want to look at, and I'll show you where it is right in here. And it's going to be right somewhere right about here, MMT. That is going to be the first resistance level right around 680.67, which is 300 pennies above the intraday high. It's 10:17 a.m. Pacific Standard Time, 10/19 of 2012. That it is. It's the first time from a mathematical perspective from the 10-week down here that you are that much dollar price below the 10-week simple moving average. You will be in range bound until this weekly moving average starts to flatten out. If it turns down, then that means the bull will be weaker. That's the truth. So it's going to have range bound intraday. And those ranges will be done with our MMT platform, such as our 13-minute chart. And we have reasons for it. Don't try to figure it out. 10-minute, this is each one of these lines are $5.21. So he's going to come up one teeny off the bottom, and that's going to be this teeny resistance, which is these diamonds. Each one of these diamonds are resistance. That top diamond, here's another area of resistance, but it's right at that 680 mark that I drew on this weekly chart right here at 680, and that's trend line. So that's going to be the upper end of the resistance, and if we break through it, we can go up to 682, which would be $10 off of the bottom up. And it's a monthly options expiration, and it's all earnings related. Yes, there will be a time where Google will turn around and it would be viable, but right now it needs to work within the ranges and get all the way down here to this bottom weekly thing, and that's slightly in the shorter term going to be right around 663. So if we can break these lows next week and get down to these lower support levels and get right above this 20-week moving average, and or hold support at the half weekly bar here and see if it sets up a base to go back up to 687 before rolling over and making lower lows. We'll let the market be the decider. High frequency models will be tracked in our system. Right here, we're at 21, we're minus 19, we went minus 28. Each line is $5.21. A 10-minute period is resistance. These are the diamond resistances. So you went up one teeny off the bottom now from this base right here, and it's 13-minute bars, and they're ascending, and the diamonds are higher. Look, they're going up in value. The wall of resistance will be right here. This is one big wall of 687, as I said, without even, and that's going to be a half bar. This particular one right here is 678.26, and that is a bar value of that 13-minute bar, and we're approaching that, and we're going to see, and he got it right there to 680. And this 680 put over here will be tradable, Brian Plain, as we go into the options expiration. It's right at the strike. They were $8.90 on the high, 5 cents on the low, and these have pulled back $2. So when you don't know how to take your profits here, you lose them all. When this thing breaks higher, they take the value out of it. Good job, MMT. I conclude that we're going to get busy and make some more money on it, and we could go 2 teenies off of the bottom. That's $10.42 from 1 teeny, 2 teenies right there, and that's going to be 680, slightly above the 684 handle. That's the MMT platform. This is a weekly standard chart. That's all that's worth. Here we are at 210 by 230. We're going to get another option to buy this right over here. Put your bids out here at 60 cents in case he takes it up before reversing it. It is a monthly options expiration, so there's going to be a lot of price volatility from the $10 up. And I'm doing this is all in live market hours. This side of the trade is still tradable. I will go get, here is that 700 put that expires today. Went from $1.65 to $25.75. What I will do is I will throw in a 685 put that is tradable on this Options Friday expiration. The time is 10:21 a.m. MMT. They were 23 cents on the low. They went to $13. They got a $12.70. They closed at $3.40 yesterday. They marked them to 23 cents on the open and then ran them to $13. What a boatload of money on this monthly options expiration. So we're above 680. We're going to go with that right there. We're going to keep this one lower, and I'm going to go over here and start making transactions there. That's the update on Google.